All right, y'all. Welcome back to Canon Range 3 for Dummies, episode 2. So, on last series, on Canon Range 3, we actually went over the overall view of everything pretty much. So, on this episode, we're going to be strictly talking about how to find CRT candles. So, we're going to hop right into it. So, from last time, you can see this is what Canon Range 3 looked like. So, just for reminders, this guys. Candle range 3 is the study of how price build traps in reverse within the range of a single candle or group of candles. In simple terms, CRT helps traders understand where price is likely to flip direction, which side of the candle is being targeted next. So this right here is, I'm gonna show y'all multiple ways. So this right here is really the reversal way, whether price is ending in a downtrend or whether price is just retracing and going back up. This is just the reversal way. You have the continuation way as well too. So you're gonna want to make sure you watch the whole entire video. Make sure the video ain't too long. So um, I will be posting series every single Saturday. This is just one part of it. So today I'm gonna be strictly focused on how to find CRT candles, candle range, how to find these candles, and to know when to look for it. All right. So we're gonna go ahead and hop right into the charts. So this right here is gold right here. So you can see how gold has lately been in we're right now currently on a daily time frame, and we're actually in let me take this off. Right now we're currently actually in a downtrend. So you can see here how price has kind of been in this downtrend, and we've been in this kind of current range. But I'm gonna show y'all where y'all actually could have made some money actually off of gold even inside this range. So if we kind of go back to the model, um, let's let me hit the replay. I'm hit the replay button. So I'm gonna show y'all what it looked like, and I'm also gonna show y'all not just how to identify it. Um, I'm also gonna show y'all what it looked like within structure as well too. Now I'm not gonna explain everything in one series, which is why I'm breaking it everything bits and pieces so y'all can kind of really grasp it, understand it, and then just practice each thing throughout the week. So on the next series, I will actually be breaking down how you can actually get your entry model and get your entries and what time frame everything. So on today's, it's going to be just strictly how to identify it and what it looked like within structure within that candle range. So just to break it down, let's hit start new. So just to break it down to y'all, let's see. All right, so just to break it down, whenever you're doing, no matter if you're a scalper, a swing trader, or a day trader, you want to make sure that when you're analyzing your market, just kind of give a little bonus tip that when you're analyzing your market, that you want to make sure that you are looking at your weekly, but especially the daily and 4 hour. If you don't look at the weekly, you got at least only time I look at the weekly is not to really look at the overall picture, but look at the previous candles. See how the previous candle closed. So let's say that candle closed very bearish or bullish. Let's say if it closed bearish, then I'm looking for the overall week to kind of maybe be pushing more back to the bearish side, and then I'll just make sure my daily and 4 hour lines up with that. So all three time frames gonna be very key, when trying to figure out how to go buy your trade. So it doesn't matter if you're a scalper, swing, whatever. So um, let's get right into it. So we can see here that we're in a downtrend. This is the daily time frame. You have to do it with the daily candle because it's gonna help you, whether like I said you're a swing trader or a scalper or a day trade. So you have to wait for price, for the next candle. So let's say, as you can see here, price is going down, right? Then on the next day, all of a sudden, we get this candle right here. So whenever you're in a down momentum right here, like how this was, right? And then you see a candle like this, and it closed like this. After that, right there, right? Literally going to you're going to expect the next day to push down and target this right here. So let's zoom in. Let's zoom in so you can kind of really see what I'm talking about. Let's zoom in real quick. I want to make sure that y'all see this, and I'm gonna show y'all what this looked like even on the lower time frame, so you can kind of see. So as you can see price came down, right, and then the next day close bullish. Now sometimes this can be a little tricky because we are in a range. So when price using the range, usually if price is in a range, you have three ways how you can trade a range. You can either wait for price to break out and retest and go higher, or break below, retest, go higher, or what you can do is you can wait till price reach the bottom of the range. We can see mostly everything been tested around here, but this is the low of the range. But mostly everything been tested around here. So you can wait for price to reach to the bottom of the range, and then wait for it to kind of take out, go back up into the top of the range, and then kind of repeat that process. Because using price in the range, it just stays in this motion until it's ready to actually either break out. Now sometimes price can fake you out. It can take this out and then go up. That's why whenever you see price get taken out, you wait for the retest, but you go on a lower time frame and look for a breaker structure off that retest, so you don't get faked out. Because at the end of the day, everything is fractal. What that means is everything is the same at every time frame. It operates the same way. Structure operate the same way. It's just on a lower time frame move faster. Higher time frame take longer. It's the higher time frame. All right, so you can see this is the last down close candle, and we see we close bullish here. On the next day, on that opening, what you're gonna do is you're gonna go straight to the 15-minute time frame, right? And I'm gonna show you what that looked like. I'm kind of getting ahead of myself on this, but I just kind of want to show y'all. We can go to the 4 hour too, and you can see here, even on the 4 hour, you can see how price is kind of. I'll show you like combined time frames later. I don't want to get too ahead of myself. Let's just focus on what we need to focus on today. All right. Make sure that y'all like, subscribe. Cause I'm gonna be posting series. I ain't glad this week was kind of like I don't say a tough week, but definitely was a hard fought week in the market. So I only trade gold, to be honest. So this is the main thing I trade. So let's pull this out. All right, so right now we're on the 15-minute time frame. So like I told y'all, whenever, hold on, let me move this. So you can see here, so this is what this looked like within structure. So you can see there was that previous day that closed bearish. Let's zoom out real quick. This is that previous day that closed bearish. So you can see how price was coming down. So this is what happened in the overall day. So obviously I have an indicator for this that shows me the overall daily candle within the structure, so I can still kind of stay in line with the higher time frame. So you can see here that price overall closed bearish, right? And you can see what happened. So price came up, came down, came down, came up, came down, came back up, then swung all the way back down, pushed back up, and then kind of closing here. So for the most part of the day, it was bearish, right? Now going to the next day, we end up closing bullish. So this is where the transitioning change is, when price pushed up to here, came all the way down, and the overall closed here. So once that happened right there, at that moment, I'm looking for price, to retrace down, because the basic anatomy of how a candle operate is, whenever the previous day closed bullish, you want to see price, push down first and then go back up higher. So you'll either be targeting the previous day high, which is be right here. So this is where you'll be targeting at. Or you can target the actual swing high of this overall point, or the overall range. Now I wouldn't target the overall range because you don't know how price is going to operate. So in this situation, it definitely would be easier just to target the previous day high, right? Can you see how we got this right here? And you can see how price took out this low right here, and we are in up momentum. So you wait for the retrace to come back down, and then we look for price to go back up. All right, so I'm gonna go ahead and play this and just kind of show y'all. So boom, price pushed down very, very hard right here. So once price, what we're looking for is, as price make a retracement, we want to see price create a clear break of structure. I'm not gonna get too much detail. I'm gonna say that for the next slide on how to catch your entries. I guess I can go a little bit into it right now because this is part of it, on seeing the structure right here, right? So at this point, you can see price pushing up, showing signs that it wants to go up. So this is a good sign. We want to see this, right? We want to see price coming to an area like this. and we want to see price push up and make some kind of breakup structure. So we just kind of wait, kind of let price do its thing, see what it want to do. All right, boom. So we got a nice push right here. So this is good enough for me. So since it's close, I'm gonna offer up buy right here and put my stop loss below here. Cause at this point, I kind of want to see price target these highs, and this is a good trade right here. You can take, or you could simply just wait for price to either push more to show more momentum, right? Or wait for another candle so price comes back down. And another good thing is to do is look at your line graph. So I like to do it a lot of times so I can kind of see how structure is. So that's another thing I like to do. Look at my line graphs. So sometimes you don't want to always keep looking at candles. So we just wait, price go, and then boom, you can see here that price came back down, pushing back up into this area. So if I kind of go back and look at the candles, what I look like, that's price doing this and then closing back up, you know. So all right, boom. So we got a clear break. So if I go to the candle, you can see, boom, that's a clear break. It's not the best break of structure, but it's still a break of structure because why? It still took out this low right here and took out this high. I'm not gonna question it. So at that point, I'm going to look to buy right here. So I'm going to literally uh buy off this uh one contract. And this is how I trade. Even when I'm trading real time, I don't do one contract. I don't do no more than one contract. So my take profit will literally be above this high right here, right here. Cause I'm looking for price to come into here. So I'll be risking this, and then stop loss will be right here. So I'm literally only risking 860 to make 3,000. That's a good risk reward. So what we want to see price continue to push into this. Obviously, on the next series, I kind of go more deeper into that on price. You know, the entry model. So we'll go more detail, but this video is not about that. This video is just really more about how to identify it and how to catch your entry. So you can see how price. I'm gonna just fast forward this. Let's do its thing, and then boom, you can see how take profit hit. So you can see that's an easy risk reward. You're literally risking 860 to make 3,000. You know, so especially if you get funded. So I just got funded. So this is easy trade that I caught. You know, and it's just like that. And this is all within the same range. You don't need no real indicators. The only indicator I use is the RSI. So I'm gonna close this because this kind of gets out the way. But and after that, boom. And the whole goal is to uh catch the main move. That's the goal. Is to catch the main move. So as you can see how this operate. Price comes down, it opens, push down first. As you can see, make a clear breaking structure right here. You can see clear as day. A clear breaking structure. Price comes down one more time, breaks this area. Once it breaks that, right, you buying here. Stop loss below the low of this candle, and then you look for it to go up higher. And this is a simple CRT model you can use. Now this is just a reversal model of this, right? And now I'm going to show y'all um, the continuation. You know, they have different models, but obviously I had to show this one because this happened just recently this week. So I had to at least show y'all this one because this literally happened this week, you know. So this is a reversal model. So this is also when prices in a downtrend. And I'm going to show y'all plenty of examples of this so that y'all can see this happens all the time. So I'm going to go back to the daily time frame just so y'all can see that this happens all the time. I can show you plenty of examples of just finding this model. Whether it's a retracement or whether it's a and what's crazy is that day, right? Let's say if you didn't got out on time, this is why I just try to catch the main move. That day actually came right back down. So, but you can see how it took it out and came right back down. So this is why I say like, go just try to catch the main move, you know. So, But I can show y'all plenty of examples of this stuff happening all the time. Okay, here's one right here. I'm not gonna go in details of this because I got to rewind it back. Actually, I can get off of this. But we can look at this. Same thing. This is the last down close candle right here, right? The last. I'm about to end this soon, so make sure y'all like and subscribe because you don't want to miss out next series. Also, throughout the week, I will be posting my trade. Well, not really posting my trades, but I will recording my trades, and y'all be able to see, my entries, my drawdown, if I get stopped out, all that good stuff. So, like I said, I just got fun. I got funded by Apex, so I'm actually working towards getting my first payout. So I'm gonna build up as much as possible and go for a huge payout. But same thing, even in a continuation, this is a clear uptrend right here on a daily time frame. The previous day closed like this, closed bearish. We're in a clear uptrend, right? On the next day, we close like this, very indecisive. When I see a candle like this after a day like this, let me zoom in this for you so y'all can clearly see clear as day. So it shows you can even do this in um even in a continuation. So you can see price came down and the next day was indecisive. Then what happened? Price opened, retraced a little bit, and then shot up. And you could have either target this high right here after this and then be done with it. So but I used to go by percentages. I'll explain it later, but let's find another example. And this is from price retracing. So it to show y'all it don't have to be even when price is going to a long downtrend. You can even do it, you know, um, when price is retracing. And when I say y'all just do it the exact way how I'm telling y'all, don't do it no other way. I don't care how many CRT videos y'all come across. Don't do it no other way. Go by your daily candle. That's gonna be whether you're a scalper, because it's gonna help you even if you're a scalper or a swing trader or a day trader. It's gonna help you on all three aspects. So don't do it no other way. So I can show y'all. Let's see. Let's see. This isn't the best example. I gotta show you the worst ones too. You can see we pushed down, price pushed up. Then on this day we kind of did here. Then after that we kind of closed bearish, breaking below here. So guess what? I'm automatic expect price to continue going down. On the next day it continued going down. Catch a retracement, cut the down move before it pushed back up higher. On the next series, I'll focus more on the actual structure of the daily candle inside of it and how to catch your entry model. So you don't want to miss that one. I'm going to be showing you the time frames when to look for your trades, how to catch your entry. I already showed you a little bit of this, a little sneak peek of that, but I'm going to go more detail of that, and I'm going to also be showing you this more deeper in depth. Here's another one, prime example. We're in the up move. Price uh, came down. The next day we closed bullish, right? After that, guess what? I'm off rip expect next to be bullish. And then easy target or just go by certain percentages. I do my take profit based off percentages. So like I said, I go more detail of that. Same thing with this one. Price was in the up momentum, and this was even better because price came up, coming back to a support level, right? And then on that we was indecisive. Then what happened next? After that, price came down, pushed up, easy target, and then even the next day after that kept pushing higher. Like when I tell y'all this same pattern happens over and over and over again, so y'all get the point. So this is when price pushed up and then all of a sudden it pushed down. So you want to wait because there's no point in trying to buy into something. If the overall bullish is biased, I'm more of a position trader. If the overall bullish is biased, why would I try to sit here and try to sell because this went down? No, I see the overall structure is still bullish. We're on a support level. Even though we closed bearish, I'm not going to sit here and expect price to continue pushing down. No, I'm going to just wait. Okay, boom. We closed very indecisive on this day. Okay, cool. So I know on the next day, it's a high probability that we can push up. Wait for the push down, and then boom, catch the entry model. We try to catch our trades around the wicks. You know what I'm saying? And then catch it back on up. Uh, Same here. Price was retracing down. We closed bullish on this day. Then the next day here. See, this is another example. They all don't look the same. You can see here how price was here, and then price here, right? So we actually made a fell low of this, right, as we shift. And then on the next day, we just retraced down just a tad little bit, and then went back up. I'm going to show y'all on the next series on how to deal with all that too. No, we're not on next series. I'll show y'all. We'll see. Just keep watching these series. But other than that, this is overall how you identify. Oh, let me show y'all a continuation method. This is a continuation. Now I said that for next series. I said that for next series on how to identify the continuation. So this is overall how you identify CRT candle in live. I will show y'all the continuation method. No, I'll show the continuation method too. So here, right here, this is gonna be the last one. Right here. This is a continuation method. So whether on a daily or 4 hour, this is how you find continuation trades because they don't show you this, right? Because I got to think about candles are just simple ways how to look at structure, So on this day here, right, price when we clear in the up momentum, we close strongly bullish, right? So guess what? On the next day, I'm expect price to be bullish. You can see how price. Let me zoom in real quick so we can just strictly focus on this right here. So on this day, we're gonna focus on these three candles right here. It's gonna be the same thing for the 4 hour. So you can see how price, when the overall uptrend, right? Price overall pushed down, came up and then closed. On the next day, I'm gonna already anticipate the same thing. I'm gonna expect price to open, retrace, and sometimes price can push up first. You don't do anything until it at least give you that retrace back down. You have to wait. I don't care if it push up because sometimes price will push up first, then come down creating that low. So you have to wait. You have to wait for it to create the low of the day first. And you're gonna know because it should at least retrace down a little bit, and then you at least make some kind of whether it's a small retracement or a big retracement like it did here. You can see how price retrace right here. So around here, this is where you're buying at. You're buying around here. This is where you're buying at. Around this right here. If I put this in replay mode, and I will. I'm putting replay mode just so y'all can see what it look like on a 15 minute. This is where you're buying at. Around this right here. Around this wick right here. You're buying around that wick, and your entry gonna be around this wick. Your stop loss go back to low of the wick, and you going for you letting price take off. So I'm gonna put in replay mode. So this is the continuation, and you can see here on the next day, right? Same thing. Okay, boom, we close bullish here. So guess what? On the next day, I'm gonna expect price to be bullish until something change. If you look here, price create a low, create a high. Price create a higher low and made a higher high. Price create a higher low and made a higher high. What that tells me, we're clear in the uptrend. All candles is a simple way how to look at structure. So guess what? I'm gonna expect the same thing. Price to retrace, make a break structure, continue higher. So I'm gonna put this in replay mode just so y'all can see. All right, I'm going straight to the 15 minute, and then we're gonna end it with this right here, and then we're going more depth on the. We're going more depth on the next series. So you can see how we overall was bullish from the previous day, right? Same concept. Price open, came down, push up, came down, made a double bottom, created a perfect breaking structure. You could have bought right here, stop off below here, and boom, take it on up. Simple as that. It's really all that simple. So we're gonna hit the next one real quick. You can see price and let price kind of do its thing. So you can see price came down. And what you're waiting for, you're just waiting for a clear breaking structure as price correct these lows. So let's see. So if we go to the structure, we can see here we got a little small little breaking structure right here. This is like a small little breaking structure. If you want to, yeah, you can buy off this right here and put stop loss below here. Right? But let's wait till the 15-minute candle close. See how the next one close. Because very choppy, very range bound. That's nothing you're gonna know. Like if you see price, you want to see a nice strong. Like you see price very choppy, very range bound. A lot of times you're gonna know. So price giving very strong momentum. You can see clear as day. So guess what? That's very strong. So it broke this clear as day. If we go to the line graph, it's not choppy. It's not range bound. Boom, boom. Price spiked up with momentum. So guess what? Usually I would have buy on the previous candle, but I'm gonna just go ahead and buy right here. Put stop loss below here. So that's risking 690 and then take profit. Obviously in this case it's already here. So at that point I just go by certain percentages. So usually I aim for at least about from the current low. I go to the low, and I go more depth on that too on how to do your take profit. And I just target at least 1.30%. Like that's literally how I do it. At least 1.30% of an expansion. And I go more in that too of the daily flip model. This is part of my daily flip model routine that I go by. We'll just target 1% right now just for good measure. So yeah, I use target between 1% to 1.30%. So I'm risking 690 to make 2400. All right, so we just let price play out. Price comes down, boom, and then even then, price create another breaking structure. So even inside this breaking structure, dip down, create another breaking structure. Let price play out, and then boom, target hit, just like that. It's the same thing over and over again. I'm also going to show you how to use the RSI. So that's another thing. I actually use the RSI, but I'm gonna say that for another video on how to combine RSI with the CRT. That's gonna be like the complete daily flip model on how you can do this. But you can see it's the same repeat over and over. You just wait for price to create drop down at a certain percentage. Wait for create a clear breaking structure. Stop loss at the low. So you're not catching your entry here. It's way more risky trying to catch your entries in between or at the top. It's way less riskier catching the wick of the move and letting the buyer take off. It's that simple. So other than that, I see y'all on the next video. So make sure you like, subscribe, and especially you want to keep up with my trades that I take throughout the week. And all that, I will see y'all on the next video. Peace.